Ladies and gentlemen, good morning and welcome to Sri Lotus Developers and Realty Limited's Q2 FY26 earnings conference call. Before we begin, I would like to remind participants that this conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. With this, I now hand the conference over to Mr. Anand Pandit, Managing Director and Chairman of Sri Lotus Developers and Realty Limited. Thank you, and over to you, sir.
Thank you. Good morning, everyone, and a very warm welcome to the Q2 FY26 earnings call of Sri Lotus Developers and Realty Limited. Joining me today are our CEO, Mr. Sanjay Kumar Jain, our CFO, Mr. Rakesh Gupta, and our investor relationship advisors from SGA. Our investor presentation has been uploaded on the stock exchanges and on our website. We hope you have had a chance to review it. Let me begin with an overview of the broader market environment. Mumbai's luxury redevelopment market continues to gain significant momentum, particularly across prime micro markets such as Bandra, Prabhadevi, Worli, Juhu, Versova. Land scarcity and aging inventory are driving a strong wave of society and cluster redevelopment projects. The city recorded over rupees 14,700 crore worth of ultra-luxury sales in H1 2025, the highest ever, with Bandra and Prabhadevi emerging as key value growth corridors. Bandra West alone witnessed nearly 190% year-on-year growth in luxury home values. While new supply is gradually rising, limited availability of prime plots and the enduring appeal of redevelopment-led projects continue to sustain both pricing strength and absorption levels in this western suburb. This is where Lotus' strength lies. We have more than 84% of our total carpet area of ongoing projects and 91% of total carpet area of upcoming projects in the redevelopment segment. This high redevelopment mix keeps the portfolio asset light and very capital efficient. Coming to our performance, for the quarter ended September 2025, I am pleased to share the pre-sales during the quarter stood at rupees 257 crore, growing almost 126% year-on-year, and collection for the quarter stood at rupees 106 crores. Due to large part of launches being skewed to end of the quarter, the conversion of these bookings into collection will largely flow through in the subsequent quarters. A key highlight of the quarter was the successful launch of the Arcadian at Juhu and Amalfi at Versova in September 2025. Both projects continue to see sustained customer interest, supported by their prime micro market location, signature blue and green design themes, best-in-class amenities, and Lotus' track record of superior execution and timely delivery. Construction at Project Varun, Bandra, is progressing very well, and bookings have commenced. Located in one of Mumbai's most coveted addresses, this ultra-luxury redevelopment will further strengthen Lotus Developers' presence in the premium segment. Construction activity for Lotus Aquaria also have started recently. Looking ahead to H2 FY26, we have 4 upcoming launches. Project Varun at Bandra, Lotus Aquaria at Prabhadevi, Lotus Celestial at Warsaw, and Lotus Trident at Andheri West. Together, this will have a revenue potential of approximately 3,500 to 3,700 crore rupees. These launches gives us confidence of achieving our FY26 guidance of pre-sale of about 1,100 to 1,300 crore rupees, revenue growth of about 75 to 85% year-on-year, and a profit after tax PAT growth of 30 to 35% year-on-year. We continue to consolidate our presence across core micro markets while expanding into newer areas such as Bandra and Prabhadevi. The strong brand acceptance of Lotus Developers is evident in our expanding business development pipeline. During the year so far, we have added 6 projects. Development agreements were executed for Lotus Portofino, which is at Warsaw, Lotus Sky Plaza at Oshiwara, and Lotus Odyssey at Bandra. Additionally, societies at Lotus Avalon, that is Juhu, Lotus Imperial at Bandra, and Lotus Upper Crest again at Bandra have appointed Lotus Developers as their preferred developer. We are in active discussions with multiple societies and expect to finalize more additions in H2 FY26. Our ongoing and upcoming pipeline, 15 residential and 3 commercial projects, has a GDV of rupees 13,000 to 14,000 crore, translating to about 2.1 million square feet of saleable area to be realized by FY30, excluding Lotus Upper Crest, which completes in FY31. 14 of these 18 projects are redevelopment, reinforcing our focus and strength in this segment. Based on this mix, we are confident of sustaining 25 to 30% PAT margins. Our focus on efficient capital deployment and superior project economics, which is core to our redevelopment strategy, allows us to achieve an industry-leading return on equity ROE of 41% for FY25. This ROE is among the highest in the industry, underscores the strength of our model, and we are confident in our ability to sustain this momentum. We remain confident in our strategy, execution capabilities, and our ability to deliver sustained value to all stakeholders. With that, I now hand the call over to Mr. Sanjay Kumar Jain, our CEO, to take you through the financial highlights. Thank you.
Thank you, Anand sir. Let me now take you through financial highlights for Q2 and H1 FY26. As highlighted by Anand sir, in this quarter, we launched 2 projects, the Arcadian in Juhu and Amalfi in Warsaw, in September 2025. The project recorded booking worth 92 crore within the first week of launch and has an estimated GDV of 700 crore. Similarly, Amalfi Warsaw launched during the same period, achieved booking of 38 crore within its first week, with a GDV potential of 300 crores. Moving to consolidated financial for Q2 FY26. Revenue stood at 176 crore, growth of 43% year-on-year and 187% quarter-on-quarter. Pre-sale stood at 257 crores, growth of 126% year-on-year and more than 3 times quarter-on-quarter. Collection for the quarter stood at INR 106 crore, growth of 16% year-on-year and 51% quarter-on-quarter. EBITDA was INR 50 crores as compared to 66 crore in Q2 FY25 and 30 crore in Q1 FY26. EBITDA margin stood at 28.6% as compared to 53.5% in Q2 FY25 and 48% in Q1 FY26. Last year margin were higher only because one of our project has unusually low cost, which was a one-off. Going ahead, we expect EBITDA margin to be in the range of 35 to 40%. Profit after tax was INR 46 crore, registered 8% year-on-year degrowth and 80% quarter-on-quarter growth. Expenses towards outgoing and upcoming projects stood at rupees 228 crore in Q2 FY26 as compared to rupees 38 crore in Q2 FY25 and 47 crore in Q1 FY26. For H1 FY26, revenue stood at rupees 237 crore. Pre-sale stood at 319 crores, growing 50% year-on-year. Collection for the half year ended September 2025 was rupees 175 crores. EBITDA was 80 crore. EBITDA margin stood at 33.6%. Profit after tax was 72 crores. Expenses towards ongoing and upcoming projects stood at 274 crores in H1 FY 2026. Net cash as on September 2025 stood at 851 crores. During the IPO, we raised 792 crores through press issue and net proceed post-issue expenses was 732 crores. We have deployed total fund amounting to 137 crores till 30th September 2025. With this, I would like to open the floor for questions. Thank you.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask questions may please press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and one to ask questions. The first question is from the line of Ankit Mehta from Wellworth Share and Stock Broking. Please go ahead.
Thank you for the opportunity, sir. Sir, considering that luxury real estate market is doing very well, how is the company positioning itself in this segment?
So, thank you, Ankit, for your question. As you know, and even today's recent report also, you might have seen that luxury market is doing extremely well, especially in western suburb, mid Mumbai, and south of Mumbai. So that market, I feel that personally that it is going to grow every year, and we are confident that we will have a larger pie in that.
Okay. And my next question was that, sir, how many new projects are we looking to add to our portfolio in the second half of the year?
So we are in dialogue with many redevelopment opportunities of societies and clusters. But we are very confident that because we are very choosy about what kind of projects we choose, we just don't want to add into portfolio, but we want to have a quality asset. That is what we want to create. So I think about 2 to 3 new projects in second half we will be adding to the portfolio.
Thank you so much, sir. That will be all from my side.
Thank you.
Thank you. Participants who wishes to ask questions may please press star and one on their touchtone phone. We'll take the next question from the line of Nikhil Garg from BNP Paribas. Please go ahead.
Hi, sir. Good morning. Am I audible?
Yes,
Yes,
Nikhil.
sir. Please proceed.
Yeah. Hi. Sir, a couple of questions. One, you mentioned that, you have one of the highest ROEs in the industry. Can you just elaborate a bit more on that what allows us to generate such a high ROE? And second question was on a couple of projects which are undergoing sale. They are still at, one of this project is still at, I think 61% sold, Ayana. So what's the outlook on that? Thank you.
Sure. So as far as project circles ROE is concerned, as you know that we have got 2-3 policies. Number one, we are concentrating on high-yielding products only. That's one. So our blue and green theory, that is water view or garden view, that is giving us a good result. That's one. Second is our asset-light model. Because of the redevelopment, we don't have to deploy a large fund into buying the land. So that is also giving a good return. Third, as you know, that company is almost net debt-free, so we don't have any expense on paying the interest. Fourth is our marketing is extremely limited because it's more like on appointment basis. So till today, we have not done any marketing expense, unlike our peers who has to spend at least 7 to 8% on marketing. So on that also we are saving a lot of cost. So this is what gets us a good ROE.
Nikhil, hi, Sanjay here.
Got it, sir. Thank you. Yes.
Yes, regarding second question of the higher inventory in the Ayana and Arc1. So the main reason was that as per company policy, we have decided in these two projects, once the project is completed and the start OC will receive, then we will start the majority of sales. So the Arc1, the OC is received the March end, and in the same in Ayana last year we have received. And so now we are selling there, and we are getting good response from the clients.
Got it, sir. Would it be fair to say that these projects will be completed by, or majority completed by the year end?
Yes. So majority of sale will be completed this financial year.
All right, sir. Thank you.
Thank you.
Thank you.
Thank you. Please press star and one to ask questions. We'll take the next question from the line of Nikhil Ostwal from Ostwal Investments. Please go ahead.
Hello, good morning, sir. So I had a couple of questions, sir. One, on the guidance what you have provided on revenue of, let's say, around 960 to 1,000 crores and the pre-sales of 1,100 to 1,200 crores for this year. Against that, in H1, we are standing at revenue 237 crores and pre-sales of 320 crores. So my question is, sir, what makes you confident that you will be, I mean, there's a substantial gap which needs to be filled in H2 right now. So what makes you confident that you will be able to achieve those numbers? And the second question will be for Arcadian and Amalfi, you had given a number of 92 crore and 38 crore in September, the bookings, initial bookings. So what would be that number as of now? If you could just let me know that.
So Nikhil, regarding to achieving the 1,100 crores, so what happened, we have launched in the September only 1 week, we have launched the two projects and we have achieved the 130 crores. So now the 4 new projects we are aiming to launch in next 6 months. And we are following the percentage completion of method. So what happened, whatever the expenditure is done, so revenue is recognized only to the extent of this. And regarding the pre-sale, we have the 6 months and we are getting good response for these two projects, and also the number of inquiry in the Varun also we are getting very good. So we are very confident to achieve the 1,100 crores pre-sale figure.
Okay, thank you, sir. And on the second part, the numbers as of now, if you can just let me know, Arcadian and Amalfi.
So that we will get back to you. Right now, I don't have that. We will get back to you.
Okay, sir. Thank you. All the best.
Thank you.
Thank you. We'll take the next question from the line of Ravi Shah from VRS Capital. Please go ahead.
Hi, sir. Am I audible?
Yeah.
Yes.
Hi, sir. Thanks for the opportunity. So my question first was revolving around PAT. So how confident are we? So I think this question was asked, I joined slightly late, I missed a bit. So basically, given the cost front loading we have on multiple new launches, how are we planning to protect our margins and achieving this guidance?
So our margin, as you see, that we have guided in the range of 25 to 30%, and we are very much confident that looking at actual numbers, which is almost in the range of 30% PAT margin, looking at the bookings and inquiry we have right now, we are very much confident that we will achieve the similar kind of number for the next 6 months of H2 FY26.
Understood, sir. So my next question is, what is the average margins we have in redevelopment, and how does it compare to a greenfield project, sir?
So if you see right now, our majority of the projects are in the redevelopment stage only. We have only one greenfield project in the upcoming one. The margins are generally do not vary that much, though because of the low investment, our ROE is very high in the redevelopment.
Understood, sir. Thank you. So my last question would be on our funding plan. So how will we plan to fund our new projects which are in our pipeline, and will we need more debt going forward?
So, Ravi, we have that 850 crore cash balance, and we have the net worth of 1,700 crore. So in the redevelopment, normally what happens is if you see 10 to 15% of the project costs will be invested for the lifetime of the project. So we are confident that we have the sufficient balance, and that can be easily we can execute the projects.
Understood, sir. Thank you so much, sir, and all the best.
Thank you.
Thank you. Participants who wishes to ask questions may please press star and one on their touchtone phone. We'll take the next question from the line of Nishita Shanklesha from Sapphire Capital. Please go ahead.
Yes, hello. I just have a clarification question. You mentioned that you are expecting EBITDA margin to be in the range of 35 to 40% and PAT margin to be in the range of 25 to 30%. Is that correct?
Yes, it is correct.
And this for FY26, right?
Yes.
For FY26 and maybe in foreseeable future also.
Okay. So I see that earlier our EBITDA margin used to be higher than the 35 to 40% that we've guided now. Can you give me the reason why it was higher earlier, and if we can reach to that level again?
So if we have already mentioned in our commentary that there was one specific project in last financial year, which there were little bit of appreciation were there. And because of that, the EBITDA margin and the PAT margin is on higher side in the last financial year. Though we are now very much confident to achieve EBITDA margin of 35 to 40% in the current financial year as well as next 2 financial year, and we want to continue with that number.
Okay, understood. And the revenue that we are targeting to achieve in FY26 is around the range of 900 to 1,000 crores, right?
Yes, we have guided on that.
Okay, perfect. Thank you so much.
Thank you. The next question is from Johan Batliwala from Motilal Oswal. Please go ahead.
Yeah, hi, good morning, everyone. I have 2 questions. My first question is on the lines of your faster execution schedule. So I can see in your presentation, your ongoing projects are getting completed earliest by FY27. Also, do you expect any project to get completed before that by the end of second half this year? That's the first question.
So, no, we are maybe 6 months before we can achieve in the Arcadian. The balance, the Amalfi and the Varun will be the same line, whatever we have projected.
Okay, and my second question is on the business development front. So you added 6 projects in the first half. What is the estimated GDV potential for that, for those 6 projects?
So around 5,000 crores GDV.
5,000 crores, roughly 1,000 crore in the second quarter. All right. Thank you.
Thank you. The next question is from the line of Nikhil Ostwal from Ostwal Investments. Please go ahead.
Hello, sir. So just continuing from the question which Nishita asked, I can understand the margins would be lower going forward, the EBITDA margins. But this quarter it's coming to around 29%. Any specific reason why it is lesser than our guided range?
So, Nikhil, the numbers could not match every quarter. There could be variation in every quarter depending on what kind of project we are executing that quarter. This quarter we have seen that the two new projects were launched recently and some revenue part came from them. And due to initial stage of any project, the margins are little lower. As the project progresses, we tend to get higher returns, higher rates, and that improve margins.
Okay. So this will normalize as we go forward, right? In the range of 35 to 40. Okay. Okay. Fine. Thank you, sir.
Thank you. Please press star and one to ask questions. The next question is from the line of Raj Mehta from MR Advisors. Please go ahead.
Hello, am I audible?
Yes, please proceed.
Yeah. Thank you, sir, so much for the opportunity. My first question is, can you throw some colors on collections and how much is it now pushed to Q3?
Yeah. So we have already collected 175 crore for the H1, and for H2, for Q2, the collection was 106 crore. And the two projects which are launched recently, the project collection was little bit on lower side because the launch was in last week only, and collection has been pushed to the quarter 3 and quarter 4. So generally, our collection would be in the range of 45 to 60% of the pre-sales amount, which we are expecting for the financial year.
Okay, got it, sir. So my other question was for Project Varun, which specific approvals are pending that are delaying the launch?
So all the approval is in place, and we have already launched this project.
Okay.
Yeah.
Okay, got it. And sir, I had one last question. What will be our business development strategy, and what are the reasons why societies will choose you as the developer?
So we have a very strong team of business development, and I, as managing director of the company, I head that committee. When we go to societies, we understand what is their need. They want to see your experience in redevelopment, which we have very large redevelopment experience. Number two, execution capability. Our execution is one of the fastest in the industry. So that is what they like. Number three, redevelopment process, we treat those projects as ultra luxury or uber luxury. So in that space, there are hardly any players. So that is our third advantage. Fourth is kind of a clientele what we have, starting from celebrities to HNIs to corporates to multinational companies. So that portfolio is very, very impressive. And most important thing is we treat them as our first clients. So all this, because of all this, we get skewed towards top of the spiral.
Okay, got it, sir. That was all. Thank you so much.
Thank you.
Thank you. Participants, you may press star and one to ask questions. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to the management for closing comments. Thank you, and over to you, sir.
We thank everyone for joining the call today. We hope we have been able to give you a detailed preview of our business and also answer your queries. We are confident in our brand, and our focus remains on executing our rupees 13,000 to 14,000 crore solid pipeline, sustaining our market leadership in Mumbai's luxury redevelopment segment, and delivering superior returns. We appreciate your continued trust. For any further queries or clarifications, please feel free to reach out to SGA, our investor relations advisors. Thank you once again and have a good day.
Thank you, sir. Thank you, members of the management. On behalf of Sri Lotus Developers and Realty Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.